Awesome. All right, cool. Well, hi everyone. Thanks for joining. My name is Pulkit K. I'm the founder and CEO of Beer30 by the Fifth Ingredient. And joining us, we have Mr. Kary Shumway.
Hello, everybody.
Yeah. So you should be able to see my screen. Are we good to go? Screen?
Looks good.
Beautiful. Cool. So today it's a joint webinar that Kary and I are doing and really focusing on practical ways to improve your brewery's profitability. So we're going to have some really fun discussion pieces that we're going to chat about just as people keep coming in. So with that, reminders, if you have any questions, feel free to throw them into the chat window. It's awesome to just have real-time communication on this. It'll be a lot more fun than just Kary and I talking for the next 40 minutes or so. So ask questions, feel free to throw them in the chat. Feel free to unmute yourself as well.
Okay.
I'm gonna go ahead and mute people if people did. Just a moment. Yeah, cool. Awesome. So Kary, I may have muted you, so you can have to unmute yourself when you were talking. Yep, so we can drop them in the chat, and then we are recording, so anybody that's on the webinar, we will be able to share this afterwards as well. So you have a copy, feel free to share this with your team and go from there. So with that, we'll do some quick introductions. Kary, how about you go first?
Sure. So my name is Kary Shumway. I'm a CPA, CFO. Started in the beer business about 25 years ago, working for a CPA firm. One of our larger clients was a beer wholesaler, and I said, how do I do that? So I transitioned over there. I was CFO for a beer wholesaler for 15 years. We sold that business. Now I'm a CFO for a brewery in Massachusetts. But over the years, the last 5, 6, 7 years, I've established kind of my own financial training business. I just noticed a real need for the financial literacy, really looking at what are the numbers of my business, how do I understand these, and ultimately, how do I use these to make better business decisions, So that's really what I've been doing. So I do a lot of online courses. We do online workshops. We have a network where we come together on a quarterly basis. We connect people. It's one of the things we saw at a Craft Brewers Conference. We did a financial workshop roundtable and a lot of great peer-to-peer interaction. So I kind of took that and ran with it, and now we're going to kind of expand that. So really just bringing people together to spread the word of financial literacy. That's what I'm here for.
Nice, great summary there, Kary. And so for those of you who don't know me, my name is Pulkit K. I also go by PK. I am the founder and CEO of the Fifth Ingredient, and we have the software system known as Beer30. Pretty much it's used in over 450 breweries right now, and it's really designed to help people out from grain to glass tracking. So using Beer30 to make purchase orders, track raw materials, the actual brew process, lab quality, sales and distribution, accounting, and future demand planning. So pretty much the entire supply chain loop. And so always happy to chat about data, always happy to chat about entrepreneurship, leadership, and getting into the nitty gritty of how to run a profitable business. So yeah, it's my background associated with it. So with that, today's agenda. First topic is going to be beer is not a fixed widget. We're going to talk about 5 rules for financial processes. Going to get into 6 areas of profit analysis, KPIs, key takeaways, and then Q&A. Again, we have time at the end for Q&A, but if anybody has questions during the talk, feel free to just type it into the chat or unmute yourself and ask. That'd be really awesome. Let's make it interactive. So first topic of beer is not a fixed widget. So effectively what this really means is that when you compare beer to other items such as t-shirts or hats or merchandise, beer is constantly changing during fermentation. And what that then ends up doing is that there's yield changes that happen with examples like yeast health. And what this also means is that if you take a base beer, you can split that up into different varieties and have different products, right? So effectively, the way to think about it is that during the actual brewing fermentation process, beer is changing and it's not a fixed item like other items that you may usually get. And because of that, during the process, you really want to make sure that your costs of goods sold are being tracked at each subset of splits and merges. Maybe you start off with 20 barrels in the brew house, and then as you get into fermentation, you're splitting it up into 10 barrels of pineapple, 10 barrels of mango, and you're just going on different paths. And each of these paths will require you to make sure that you're tracking those costs of goods. And with that, as we all know, that supply chain changes really have different inputs that happen from our markets right now, right? The cogs that were there today is definitely not the same that it was 6 months ago, a few years ago, pre-COVID either. So because of that, raw materials and packaging supplies have different prices, and you need to make sure that at that point you're really working with your suppliers and understanding how to best change that and best understand if you are getting the best rate, best bang for your buck. So with that, a key to figure out is what you can actually do and what levers you have. So Kary, over to you.
Yeah, so I think that, those are really good points. Is it's the costing is really dynamic. It's changing all the time, and I think what I see when I work with clients is there's not a really good grasp on the costs. We know what we're selling stuff for. We kind of have a pretty good guess as to what it actually costs, but ultimately, I think in the absence of a software system to pull it all together, it's really hard to know what your costs are because they're changing all the time. But once you kind of get your hands around it, it's how do we do better? Because very often, this is an era of margin compressions. We're seeing, the costs are going up. It's hard to take pricing commensurate with that. Margins are generally shrinking. For those who are distributing through a wholesaler or self-distro, you feel this. Certain package types, the margins are not as robust as others. So for example, if you're doing larger pack sizes and whatnot. So we're constantly on the lookout for, number one, what are our actual margins? And that's sort of step one is for every brand and package, what does it cost? What are the margins that we're seeing on these? Where do we have some red flags? And how can we do better? So I think this bullet point of never assume that we're doing the best job that we can. And that's not a knock on anybody. It's just that there's a lot of details that go into and drive and influence the costing. So we need to start with really looking at that data. And the first practical step is looking at your bill of materials for, say, your highest volume packages. What are we actually putting in here? What does it actually cost? How do we know those costs are right? Okay, those costs are, how do we know those are the best that we can do? It's some price comparisons. There are a number of resources out there for folks to look at. One such is there's a company that can come in and do a benchmarking study for you. So, there's an investment in that cost, but they're going to say, here's where you are out of spec. Maybe you're paying too much for this or that, or some things you might not have thought of. So how do you scrutinize these costs? And I think for the most part, we try to do the best we can to get the best pricing, but ultimately it's hard. If we're a relatively small brewery, certain size scale, you're only going to get so much pricing. So one might be use that outside firm, come into a benchmarking study. Another might be, how do we get involved with buying groups? There are buying groups out there that can help you leverage that. So how do you get the best rates? There's some, first identify what your costs are, and then maybe utilize some of these resources to figure out how you could do better. And then there's contracts. Very often, the other side of the equation, if you're willing to commit to purchasing power matters, right? The more you buy and the longer you commit to, you're generally going to get better pricing for that. So looking at where do you have contracts, where do you not, where might you be able to implement them, and that extends to everything from your utilities to your gas purchases, and obviously to your your malts and your hops and whatnot of purchases as well.
I'll even take it a step further, and even with
Yeah.
software, for example, we're doing multi-year contracts for people associated with that as well, with a discounted rate, just so that way people are locked in and they do get that purchasing power parity that you're talking about, Kary.
Absolutely. But I think it really starts with just being really curious and asking the question and digging in on the details. Because very often there's we pretty much know what our costs are. And maybe you do, but if the process of digging in there, you can be like, wow, that's what we're paying for that. Can we do better? Because it can really add up. And I guess the last thing I would say relative to these, there's lots of levers. Really looking at your yield, I think, is important, and measuring these things over time, because they do change. What is your yield percentage on your biggest selling beers? Do we know what it is? How are we tracking it? If it's different than what you thought, how can you, identify what might be going on to close those gaps? So there's lots of levers. We just kind of want to make that list, prioritize it, and knock through them.
Awesome. Nice. And so with that, the other aspect that really comes into place is that at the end of the day, a brewery's health pretty much has three key factors, right? you have quality, you have efficiency, and you have sales. And when you start thinking about it in a whole, the biggest aspect, the biggest downside is complacency, right? And if you're trying to build a business, complacency kills a brewery, it kills a business. And at this point, when you start looking at those three key factors, quality, efficiency, and sales, it effectively ties in with this mentality where you got to have good quality beer, right? You got to keep your customers happy. At this point, if you're making poor quality beer, your customer is just going to write you off and go right down the road to another brewery because there's just so much competition. So high quality beer matters. On an efficiency side, you want to have the more output that's possible in the same time or with the same capital that's there, right? You don't necessarily want to look at your fermentation vessels and say, oh, I need to add in 2 or 3 more tanks in order to keep up with demand, when in theory, you could get more output where instead of an 85% yield, you're getting a 90% yield or 95% yield out of those same tanks. So that way you can really optimize what's going on from an efficiency side. And really, the third key factor here is sales, right? You could make the world's best beer, the best efficiency, but if you're not selling it, there's no way you're going to be able to make revenue or you're going to be able to grow profit margins. And so sales are instrumental in bringing in the revenue, but also that's where cost of goods and knowing exactly where they are really critical. So that way you can keep growing your profit margins. You can't just have the same price for your lager as your triple dry hopped IPA that's there, because the costs are just going to be way different, right? And so as those costs are fluctuating, really being able to understand what that looks like from a sales perspective is also going to be super critical. So with that, let's talk about the 5 rules for financial processes. So this is Kary's bread and butter, so Kary, over to you.
I love this. Well, so the genesis of this was really that, number one, you have to have a process, right? And, the joke is like, your brewers don't just wing it out there. They have a process, they've got sheets, they've got checklists. They're doing things in a very regimented and consistent fashion, so as to produce a consistent result. Once you get that quality, you dial in, you got to do the same things over and over again in a repeatable fashion. And your financials are really no different. So I kind of wanted to run through these 5 rules. The other thing too is I'll get the question a lot, particularly from folks that are either just starting up or growing their business or are trying to like, hey, we're having some trouble. What are some things I need to do? And most often people would say, what's just like 2 or 3 things, 3 or 4 things that I really should do. And so I just said, all right, rather than continually re-answering the question, I'm just going to kind of write them down, send it out there. And these are the 5 things. It's to have a consistent process. It's to have a plan. It's to review your actual results to your plan, understand your costs and margins, and really keep very close eye and safeguard one of your biggest assets, if not your biggest assets, is inventory. So on that next slide, we'll look at, what does this mean? What is a month-end financial process? For me, in its simplest form, it's a checklist. I have a checklist where we basically say, how do we follow a consistent process so that we get a consistent result? And that checklist can be as simple as, the dozen things that you need to do. So we often say, what do I need to do? Who's going to do it? What's the timing in which it needs to be completed? And did I actually do it? So for those of you who are a fan of the Checklist Manifesto, great book that's out there, or if you've ever been in an airplane, all right, or if you've ever been to a doctor's, they have a checklist, and there's a reason for this, is that we as human beings, we forget things, that's just how it works. So we need these consistent, and they can be very simplistic, but a checklist would look like, for example, when do we want to close out the month? And what are all the things that we need to do in order to get that closing done in a timely, complete, and accurate fashion? So we're going to need to reconcile the bank statement. We're going to need to make sure we have a cutoff for accounts payable, which means at a certain point, we're going to stop waiting for new invoices to come in. We're going to have a cutoff for that. We're going to reconcile our inventory balances. So for example, we do an inventory count. We compare that to what our books say. Well, there's a difference. Let's chase down that difference. And we need to record to the physical count. So on and on and on, these are the things that we need to do. And the single biggest thing that you can do to make sure that your financial statements are clean and squeaky and accurate is to reconcile your balance sheet. So the example of reconciling your inventory, you do account, you look at the balance in QuickBooks, there's a difference. I got to make sure these are the same. That same reconciliation for accounts payable, for accounts receivable, for accrued expenses, if you have those for prepaids, look at your balance sheet. Every number on there needs to be reconciled. In other words, you need to be able to support and show how that number is accurate. So that's, if you do nothing else, that's a super important thing to add to your monthly process. So that's number one, create and follow that monthly financial, and I would add to that a year-end process as well.
For sure. Nice. Over to number two.
Build your financial plan. It's really funny because I think we all know we need a budget, we need a financial plan, and most folks don't have one. You know, we did this survey recently, like, well, do you have a plan? Yes or no? The probably 2/3 no. And then if you don't have a plan, why don't you? And the top reasons were, you know, it just takes too long. Once I'm done, I don't really know what to do with it. It's irrelevant. I'm going to spend all this time, and you know, what's the point? Is kind of the, so really it's, the point is the financial plan is useful, but the planning process is indispensable. So we really want to have some sort of roadmap. And you talk with different people about, you know, how this should look and what the planning process should feel like. And the best, I'd say best in class, are doing financial planning every day, every week, bi-weekly, monthly. There's a cadence to it. It's not like, oh, at the end of the year, we're going to do our budget. It's every, because you got to check in and see how you're doing. But the building of the plan is really where the magic happens. So if you get in there and you give yourself over to the process and you have an outline, you know, what's the team that's going to be involved? What tools might there be? You know, what's the timing to start and finish? You know, how are we going to, you know, share this information? That planning process can be really amazing. You know, we're turning over rocks trying to run a better business. And this is a really super way to do it. So ultimately, you'll get a plan on paper, but you'll have gone through the planning process, which can uncover a tremendous number of opportunities for your business.
Nice.
So the third is review and analyze the actual results on a regular basis. And so for those that do have a budget, this gets hard because we need to be checking back on a regular basis. You know, it's as simple as, you know, there's so many stories like this, but, you know, IBM back in the day, at the conclusion of every day, they would say, you know, where do we stand in relation to our goals? There's a gap. How are we going to close this gap tomorrow? That's it. So your financial reporting is the same way. The cadence is usually monthly, but it doesn't have to be. It can be weekly, where you really want to look to use your month-end checklist to get complete, accurate, and timely financial reporting. That's going to be your guide for where we're going to go. And then your monthly review is saying, where do we stand in relation to our goals? We want to identify the variances, the gaps, the shortfalls, and ultimately create action plans to get back on track if in fact we're off track. So this is not like rocket science, but it does take discipline and consistency. So if you've got a plan, you got to set aside that time to compare budget to actual. What are the variances? You know, and again, the best that I've seen do this on a really regular basis. That might look like this: a daily 15-minute check-in. Where are we at relative to our goals? And we're going to talk about KPIs later, but these goals can be as simple as a number or two for each of your department leaders. Where do you stand every day? Weekly, we're going to sit down for 90 minutes and we're going to run through our major financial objectives: sales, margins, bottom line. And then on a monthly basis, we're going to have our operational meeting, our sales meeting, our marketing meeting, which is then going to support all those things. So it's really a whole system, but it starts with just the concept. We got to check in on this stuff on a regular basis.
Nice.
And the fourth, now we get out of sort of the, okay, you know, we got to have a process, we got to have a plan, we got to have a system to check against the plan. Now we're getting into the granularity of, and really where most of the challenges occur for breweries is, what does my beer cost? Because most people just don't have a great sense. You know, and again, it's made exponentially easier with a piece of software to track this stuff. So you're not constantly, oh geez, the price on malt changed, the cans are a different price, I get a different freight thing. Everything's constantly moving. So understanding your costs is really mandatory if you self-distribute or sell through a wholesaler, because your margins are just so thin. And if you don't know those costs, what it costs to produce and package the beer, it's really impossible to know what your margins are. And if you don't know your margins, you don't really know where to put the emphasis. You could be selling, this package is selling great, and you're like, oh God, we're not making any money on that. In some cases, you could actually be losing money. So it's super important to understand that. So we start by saying, let's just use a simple spreadsheet to capture your prices, costs, and margins, maybe for your top selling brand. And then compare that to your income statement and see, is that what we're actually making? Because what I think my costs are this, what's actually flowing to the income statement. So understanding beer pricing, costs, and margins, it's a big thing. Super important, though, to keep yourself financially sound. And then lastly, at least for the top 5, and of course there's a lot more than 5, but I think if you're doing these things, you're going to be in really good shape, is properly valuing and safeguarding your inventory. So these are challenges, as I've already mentioned, cost of goods sold, getting your hands around it. It's a big driver of profitability. So we really advocate for having a consistent count. And what that count's going to do is 2 things. One, just make sure you've actually fit, your physical count compares to your financials. And it's going to keep you from running out of stuff or having too much. Because from a cash flow perspective, there are certain measurements we want to look at. We want to look at days on hand of inventory. How much do you have raw materials, packaging goods, and so forth? And what do you need to satisfy market demand? And we need to do some ratios so that we're not sitting on too much inventory, which means we're sitting on too many dollars, and bad things can happen. Hurts cash flow. Those are dollars that are not in the bank. And furthermore, stuff does over time start to go bad. So we don't want to have an issue with sort of out of code beer, because there is a shelf life on those things. So inventory is super important. So just to recap quickly, you got to have a process each month. You got to have a financial plan that's going to set the direction. You got to check against it on a monthly cadence at a minimum. You obviously want to be safeguarding your brewery inventory and those important assets.
Nice. Awesome. All right. So with that, let's shift topics a little bit and actually look at 6 areas of profit analysis. So with this one, the first one is really focused on process optimization. 2 is on quality control. 3 is on inventory and MRP, really diving into what Kary was just saying about knowing the assets that you have on hand. Cost of goods sold, again, the recurring theme for today's conversation. Sales and distribution, and then really time savings across the team. So let's just dive in on each of these areas. So really the first one is, if you're looking at actual practical things after you leave here today, it's looking at improving and controlling your brew to package yield. And what that looks like is really getting some results and increased output per batch, and really looking at ways that with the same ingredients that go in, you can reduce your cost of goods sold per barrel, hectoliter, liter, and really start using and tracking charts, identify variances and improvements in pretty much 3 key areas. Where it's what's happening on the brewing side, what's happening on the filter and transfer side, so what actually gets into your bright tank for conditioning, and what's happening with packaging, right? And so effectively from an operational standpoint, everybody on this call should be looking at ways to keep optimizing their processes. And what that also results in overall is minimizing tank turn time, right? If you have a lot of these areas really fine-tuned, you could in theory result in increasing your overall fermentation capacity, which means you're getting more beer out without having a capital investment of more tanks. You're eliminating that need for more money. And really, as you start looking at those key fermentation metrics, you're able to start diving in on analyzing and looking at optimizing cellar schedules, streamlining recipe variations and fermentation trends, and looking at key areas such as daily gravities, pH, temperature, and VDK. Right? So these are all areas that really hone in on that process optimization piece that you really should be doing with your data. And at the end of the day, it doesn't matter if that data is on Beer30, if it's in Ecos, Obeer, spreadsheets, Google Sheets. The point is, just like Kary is saying, you need to have a process and you need to keep doing reiteration on it just to keep improving and going down that path. From there, quality control. Again, complacency kills a brewery. Make good beer. So what you really want to have with that are real-time alerts and sign-offs at every step of the process. What that looks like is you want to mitigate any production errors that get done proactively before they move further down the process and consume additional materials, time, and tank space. And really, from my perspective and our perspective at the fifth ingredient, you really should have 3 sign-offs from a QC perspective. When the brew is finished, before you mark something as ready to filter, and before you mark something as ready to package. And these are all 3 key areas that you should be going through and having either a manager, a lab person, a head brewer, somebody signing off on that beer. And with that, as you actually go through, look at your yeast pitch, right? And look at if there is any cost savings depending on the size of your brewery for harvesting, propagating yeast, but also looking at yeast genealogy from batch to batch, where if something starts stalling in one of your batches of beer and you harvested that yeast and put it somewhere else, you probably can expect that batch to also start stalling. And if you have multiple batches that are stalling, that's not going to be good for your overall QC perspective. And it's really going to have an impact on your overall tank turnaround time as well. From a quality perspective, really make sure that you're repitching generations and really minimizing that fresh pitch cost, because there's a lot of savings that can happen if you have the proper tools for that. From there, really being proactive when it comes to validation of your brew sheets, right? So no matter what system you're using, start setting target tolerances for each critical brew spec. Provide user with that instant feedback where it's that green, yellow, red stoplight symbol, right? If something isn't accurate, it's not within spec, it's red. Hey, this can kind of get by on my pH, my gravities, etc. It's yellow. Hey, this is perfect, it's green, right? And these types of feedback pieces should really come with real-time alerts for team members via text, email, and really being able to understand proactively, hey, this beer that's going into the tank right now may have some issues that we need to be aware about right from the get-go. On that realm of proactive validation, you should also do predictive analysis, right? Look at something like gravities, for example, and start graphing it out. Again, use software, use your own spreadsheets, use a paper graph sheet. I've seen a number of breweries that I've walked in on and they just had a piece of paper with a chart graph paper from like high school calculus, middle school days, and they'll go in and start graphing it out. And it's really critical where you can start seeing in this example, there's a super tight spread of gravities and day numbers. Like in this case, the gravities are 10, 6, 9. But if I were to look at those same exact beers on pH, you can see that there's a wide range of data here, which means that even though the gravities are super tight, the pH is ranging from 5.1 to 5.9. Then we actually had a customer look at this data to understand that the water coming in from the city was changing. Right? And water profiles are so critical when it comes to your overall beer quality and beer consistency. And if water pH is fluctuating, then you know for a fact that your beer pH needs to be adjusted accordingly. So again, getting very predictive about that and getting into that mindset of what's needed from a quality control perspective and really taking actions to fix it, like changing your recipe if the water is fluctuating or making adjustments to your water with buffer tanks, RO skids, whatever else is needed. From there, getting into number 3, inventory and MRP. This is definitely Kary's favorite. So using data to improve your MRP, your material resource planning, and really focusing in on that just-in-time process for raw materials and packaging supplies. That's a key aspect. You don't want a lot of ingredients just sitting on the shelves. I mean, Kary, in your perspective, how often is it that some of your customers have just inventory sitting on shelves without, proper planning?
All the time.
Yeah. And so that's really thousands of dollars. And so you're paying for warehouse space, you're minimizing your cash flow. Again, like Kary was saying, losses due to raw materials expiring or even packaging materials being phased out, right? Many times it ends up being that you had a seasonal, you over ordered for it, and now you just have a bunch of cans or a bunch of labels that need to get thrown out. And so it's really critical to make those accurate purchase decisions by having future forecasting feeding into a material resource planning spreadsheet, algorithm, anything that's actually tracking this and knowing when to order things. From there, cost of goods sold, item number 4 for profitability. Use the data to calculate COGS for each brand and packaging type. And what that means is that you gain visibility into profitability for each SKU that the brewery sells. And really with that identifying each of those SKUs, you then look at opportunities and costs that tie in with optimizing your recipes, right? Maybe if you know that you're adding in different adjuncts, different ingredients, you could change your hop bill, right? Maybe the pineapple, the grapefruit, whatever else, the mango flavor is overpowering your hops anyways. So maybe you can change your recipe bill. You can make sure that you're adjusting your prices on the sales side to have an attractive margin. And really, one of the key things here is not only are you looking at it from batch to batch, you're also looking at it over time, right? So to Kary's point, you need to have that plan in place. And with that, what that looks like is you're looking at those variances from target COGS to the actual COGS. So everybody going into this call today should know what is your ideal target for a 6-pack of your lager, for a keg of your lager, a keg of your IPA, whatever your core brands are. You should have a target in mind, right? And that target should be based off of past data, and then use that to actually know what that quote unquote gold standard ends up being. And then as you then compare your actual COGS, you really want to start looking at cost of goods as efficiency metrics for grains, hops and adjuncts, yeast, packaging supplies, labor, rentals, and including, based on the country that you're in, final landed costs, which could be items, shipping, and taxes, based on what the overall aspects are that go into that batch cost summary. And with that, as you actually start looking at optimizing for profit, you need to compare your COGS for one batch across bottles, cans, and kegs. In this example, we can say that, hey, my 24-pack of bottles is $15.28, 24-pack of cans is $11.41, and my half-barrel kegs are $92.84. Awesome. That shows me for that one particular batch. But we need to look at this from a brand level. And if I'm looking at my brown sugar ale, I need to be able to compare my batch 13 across 14, across 11, across 12, and really understand how that data is fluctuating on a batch by batch basis for that same beer. And then you take it one step further and you actually look at what those variances are. For example, here, your Belgian Hef, your COGS target is $6.50 for a 24-pack, but the actual data is $7.51. That's a variance of 15.5%, which is why it's flagged as red. And immediately, as an owner, as a CEO, CFO, head brewer, you should automatically be thinking, whoa, 15% is not normal. Why is this happening? And start diving in on that data set to understand what changed, which is causing these variations across batches for the same exact core beer. From there, we get into sales and distribution. Use real-time brewery inventory so that way your sales team knows exactly what and when beers are available. You want to make sure that there's clear stock numbers and that you have a proper production timeline so you never miss a sales opportunity. Right? The last thing you want is your sales rep going out into the field, actually getting an order ready, and then realizing, oh crap, we don't have that ingredient or we don't have that actual beer in stock right now. And so because of that, you can then focus on minimizing overcommitments, use the data to show what is on back order to then drive the actual production side. And then from there, use that data to really transition between seasonal limited releases, right? You may have a holiday special right now for December, January timeframe, like a peppermint mocha beer or something, right? That's probably not going to be around come June, July. And you may have pumpkin beer, things like it. And so you got to know exactly what's going to sell when and be able to forecast that into MRP, cost of goods, know exactly what the margins are going to be as well. And finally, number 6 for profitability, time savings. This is my favorite one that I always talk about is consolidate multiple spreadsheets, paper sheets, email digests into a central source of truth. You could use a brewery software, or we have people, and I know people that are stuck with their spreadsheets because they're so interconnected and it makes sense for them, right? If you can build out a master spreadsheet that has pivot tables that are incorporating across multiple tabs, purchasing, etc., more power to you. But if you're really focused on just brewing really good beer and making sure that the data does the work for you, get some sort of system or software in place. From there, be proactive. Assign tasks to people, get real-time alerts as changes happen, and really look at the data and the numbers to optimize time savings, pre-built sheets, and tax reports as well, right? The last thing you want to have is spending an entire day and a half calculating excise tax, calculating your brewer's report of operations, how much money are you actually paying for the government, because that's all time savings that you can easily have if you have software and systems in place. And finally, avoid the redundancies, right? The things that people hate the most is on a brew day, writing something on a piece of paper, then at the end of the brew day, having to go in and type that into a spreadsheet, Then from there, sending out the end of shift email to the entire team saying, this is what our knockout yield was. That can just be automated if you have proper systems in place. So again, time savings, really big one that tie into that. So from here, we're going to turn to KPIs, changing topics a little bit. So Kary, over to you.
KPIs, I love them. Could talk about them all day. Just since we're on the subject of, inventory KPIs, I'll just throw out probably my favorite four, and I know we're going to talk about even more, but, I think if folks are focusing on inventory in particular, you got to have a days on hand calculation. Like, what do I have? Do I have the right amount of inventory? I want to have an out of stock calculation, because that's super duper important, right?
Wait, Kary, real quick, can you explain what a KPI is for people on the call if they've never heard of KPI
Sure.
before?
KPIs, I call them key metrics, critical numbers, key performance indices, key performance indicators. So these are really the numbers that are most important in your business. So first, you really have to kind of identify what's most important, and then you can kind of measure against it. But it's really just that, a quantifiable measure of performance over time or for a specific objective. So if we're talking about inventory, it could be out of stock, it could be out of code, it could be inventory variances. So you want to kind of like say, hey, generally speaking, inventory is an undermanaged asset. Generally speaking, it's a huge asset. So we probably want to put some KPIs around it. So that's just, again, sort of generally speaking. More specifically for you and for folks that are on the call today, we really want to start with what are we trying to accomplish with a KPI? And usually we're trying to solve a problem, or take advantage of an opportunity. Or as I've often said, there's something that just keeps me up at night and I need to fix it. And, maybe I can quantify it, measure it, throw some eyeballs on it and hopefully stamp out the issue. So I think first it's a very introspective exercise, is what do we need to do? Now for some breweries, it could be, nothing to do with production and packaging. It might be, we need better customer service through our tap room. For others, it could be that, the yield on our products is just not acceptable, as PK you've articulated. Like, how do we, and then, so once you've identified the problem or the opportunity, then you want to try to quantify it and come up with some sort of way to measure it. And that's really where this whole KPI thing comes in, is, we talk about financial shorthand. Like, how do we, in a number or two, kind of get a sense as to how we're doing? Are we on track? Are we off track? As a finance person, typically I'm going to run a set of financial statements, right? I'm going to run an income statement, a balance sheet, a statement of cash flows. I'm going to read through all this. It takes some time, and it's not for everybody. So KPIs are very accessible in that they're measuring a very specific thing. So whether that's inventory turnover, yield percentage on a batch, labor hours per barrel produced, you want to identify. But you want to start with measuring things that matter. So what's something that's important that once you measure it, it's going to make a material difference? So that's a real starting point. Now, how do you go about this? There's different ways to kind of break up these KPIs. And, I like this sort of grid, that Pulkit had come up with, which is, let's think about our business in its entirety, and we've got maybe 4 sections: process and quality, operations and people, marketing and sales. And there can be others, but you do a little quadrant and you identify KPIs in each of those quadrants so that you're touching each area of your business. That's one way to do it. So it's a good sort of brainstorming team exercise. Another way to do it is a departmental approach, where you use the concept of everybody gets a number. So if you've got a tap room, you've got admin, you've got sales, you've got marketing, you've got production, you've got packaging. You go on down. Maybe you've got a maintenance. So every functional department that you have can have a KPI or 2 or 3, and those KPIs are then aligned to your top level goals. So we say, what are our goals as a company? Sales growth, cash flow, whatever they may be. And then what are the department KPIs that we can create that are aligned with those goals, and then give those to our department managers so they can be watching them on a regular basis. So when they hit those numbers, it's going to feed up to that top line objective. So we've got a lot of like off the shelf, I would use this, and this, when we've done this exercise, and I know PK, you've done it a number of times, and it's really interesting to see kind of what people come up with. But I keep coming back to the fact that, yeah, we can talk about the off the shelf ones, but start with looking introspectively at what's going on in your business, problems, opportunities, things that keep you up at night, figure out a way to quantify them, grab a couple of KPIs and off you go. And then you measure it. It's just the same old thing. Measure it, manage it. You're going to ultimately improve it. So, but it starts by measuring what matters.
Yep, awesome. And so we put together a list of 18 here, and we'll go through them just so people have a starting point. Like Kary said, this is off the shelf. So minutes per brew, total brewed in liters per barrel, total packed liters per barrel, brew to package yield, yeast health, sensory true to brand, gravities and pHs during fermentation, DOs and CO2 levels, ABV percentage IBU and color for finished products, cash flow, number 10, Kary's favorite, all-time favorite KPI, scheduling changes, tank residence time, on-hand inventory, again, another favorite of Kary's from financial side, marketing conversions, if you're paying for Instagram ads, Facebook ads, if you're having events at your brewery, what are the dollar values there, and the ROI for those events, finished goods and the stock on hand dollar values for finished product, the cost per liter, barrel, gallon of finished product, sales projected versus actual, and then account days on hand. Right, so these are 18 variables that hopefully people on this call can start off with. Kary, are there more that you want to add as a high level, or any that you want to flag from this list?
You know, it's funny. I was talking to a brewery GM earlier today, and they focus really on just kind of three things: sales, operating expenses, and inventory. And they have metrics supporting each one of those. And so for them, those are like the key drivers of their business. So I think the only thing I would say is that consider, you know, sort of high level objectives first, and then you can get more granular. Because we do tend to want to get really granular really fast. Like, what should my labor hours per barrel be? You know, how does that compare to? And we can get there, but I think first let's measure cash flow. So I would sort of underscore number 10, you know, focusing on your cash flow as really kind of a number one. And then I would look at, you know, some of those profitability, sales growth, margin metrics. I start very simple and fundamental when I'm sort of attacking these KPIs. Is let's just go with the core set that we'd want to look at. So those would be my favorites.
Nice, awesome. And so that actually, Kary, that's a great segue for tracking results in team meetings. I would love to, you know, hear your experience and how you set this up with some of your clients as well.
Yeah, I think it's interesting too, because it's like, you know, the X factor in making sure any of these things are going to work is the consistency with which you communicate and you meet and you check in on them, right? So you can have a KPI, you can have the best KPI ever, but if we just put it out there and we're not tracking and measuring against it and identifying, you know, what's working and what's not, it's probably not gonna get us where we want to go. So, you know, there's different cadences to your meetings. So it could be daily, weekly, bi-weekly. You got to figure out what's right for your business. Some people are like, I can't handle another meeting. Others are like, this is important. We need to meet on it, like, you know, every Monday or whatever, what have you. But really taking those KPIs. So if you've done them in these quadrants, sales, marketing, operations, people, process, and quality, and then having those stakeholders at the table, and then going around that table and figuring out where do we stand in relation to these. And I do like the color coding, you know, green, we're good, yellow, we got to watch that, and red, we've got problems. So people can really just dial their attention on that. Now, one of the things that I've seen work really well is what we would call, there's many names for it, but like a 2-minute drill. So you come together in the thing with meetings is you get, you know, that we've had so many bad ones, but if you want to set up an effective meeting around this, you know, we come prepared, we come ready to participate. You know, we're not going to just sit there in the corner and not say anything. We come with a number. We can take the emotions out of it. This is really about the number. It's not about, because when we're sitting in an interdepartmental meeting, you know, maybe we've got sales and marketing and production and packaging and taproom. Everybody's got their own agendas, right? We all have our day to day. You know, we may not be too thrilled. Production may not be too thrilled with packaging, and packaging is not too thrilled with admin, and blah, blah, blah. We all sort of operate independently. So when we come around these tables, the goal is, you know, what are our KPIs? What are we measuring them? How does that calculation work? And then ultimately, it's how can we help one another to help it to achieve those goals? You know, how do we brainstorm around that? So the agenda should really be based on what are the numbers, how did we come up with these, so that we can kind of we can break down those silos and those barriers as one part of it, and then we're watching those numbers. And then obviously the goal would be collectively try to solve these problems. So if we've consistently got a problem with production and packaging, we just can't figure it out. I mean, it is possible someone in admin or sales or marketing might say, well, I've got a thought on that. So it's everybody, all these minds working on the same problem. So that's just kind of another benefit. But I think it's the consistency with which you meet, communicate, track, and then try new things if you're not getting where you need to go. So it's really a lot of fundamentals there, but having that good structure is a good starting point.
For sure. And that root cause analysis piece I always love emphasizing, right, is if you get anything that's red or yellow, now even at our own company, we do this like, okay, this didn't work out. Well, why didn't this work out? And then you keep going many layers deep by trying to get to the root of the problem and really understand, well, this did not go according to plan because of XYZ variable. And that's really critical to then dive in on these particular meetings. So yeah. My final piece here that I hear a lot is, am I too small for KPIs, right? We've done this, Kary and I have done this exercise at Craft Brewery Professionals, other state guild events, and no, the answer is always no, you are not too small for KPIs. If you're brewing, you end up tracking KPIs, whether or not you know it or not, right? So examples, gravities, pH, temperatures, any consistent brewer will be tracking these metrics, and you can turn them all into KPIs. As an example, how often you hit the target is an example of a KPI. Maybe you set up for your brewer, hey, this month out of our 20 brews, 18 of them need to hit the target of pH during knockout. And now you have an 18 out of 20, 90% success ratio. That's that one metric that the brewer team and the brewer always cares about. I got to hit 90% monthly for my actual pH knockout, right? And so it's very interesting because no matter how big of a business you are, whether you're just getting going on a very small scale, home brewing level that's just starting up their production, all the way to multi-million-dollar facilities, you need KPIs to understand just what those metrics are and how you're trending. So nobody is too small for KPIs. Yeah. So with that, key takeaways. Remember, beer is not a fixed widget. Kary's 5 rules for financial processes, the 6 areas of profit analysis. Really, at the end of the day, brew better beer, brew more beer should really be the mentalities that everybody has with these areas that we're looking at. What actions can we take today to set some KPIs, and really opens it up for questions. So if you have anything, feel free to unmute yourself, feel free to throw it in the chat. This is my information, Kary's information as well, and we'll send out this slide, we'll send out the video afterwards as well, so everybody can look at it and pass it along. Kary, anything you want to add while we wait on some questions?
Yeah, I mean, we covered a lot of ground. We threw a lot at you guys. So I think it is, just kind of take what's most important to you and start with that. It might be the KPI thing because it's easy, it's accessible. Most people enjoy it. And, using one of those kind of methodologies, right? And we've got some visuals maybe we can share in terms of, how do you organize those KPIs so that and how many, what's the right amount, because I've seen them where we've got like, there can be too many, if you're trying to measure dozens and dozens. So that might be a good starting point. The other might be is, kind of going back to the financial processes to have one. We've got a checklist we're going to be sending around for folks for month end. It's kind of a mission of mine to get this out there to as many people that, can see it and use it and think about it. And it's a very simple, but it's intended to be comprehensive. And furthermore, the clients that I've shared it with, they're like, wow, this actually works. So I'm hopeful that for someone on the call who's not currently having a structured month-end process, this might be a helpful.
Yeah, for sure. For them. Yeah, so everybody that's attended, we're going to be sending out some links. Yeah, so Scott's asking about presentation. Yep, we'll send out the presentation. We'll send out the PDFs. We'll send out checklists. Janelle was asking about examples. Yep, we'll send all that out afterwards as well, so people have proper resources that they can then start utilizing for their month end and start utilizing to actually improve their profitability, especially because we're getting into that last, 16 days of the calendar year now, 17 days, and we're getting to that end of, hey, we got to wrap up 2023 strong and get ready for 2024.
Yep. Yeah.
Cool.
Absolutely.
Awesome. Well, thank you everybody for joining. We will be sending stuff out afterwards and hope everybody has an awesome holiday season as well.
Thanks, everybody.
Cheers, everyone. Bye.